AI's biggest opportunity may no longer be building AI, it may be managing AI. A story that almost nobody noticed recently made me think the industry could be entering a new phase. A company called Ambit announced an integration with Microsoft Copilot Studio. On the surface, it looks like a normal product launch, but the signal behind it may reveal where AI is headed next. Hey everyone, I'm Nolan. Over the past 2 years, the most important goal in AI has been making AI smarter. But as more companies begin deploying AI across their businesses, I think the market is entering a new stage. And in this stage, the biggest challenge may no longer be how to build AI, it may be how to manage it. Over the past few years, the focus of the AI conversation has been pretty clear. Whether it was ChatGPT, Claude, or Gemini, the market mainly cared about which model was smarter, which one was more capable, and which one could handle more complex tasks. That's because in the early stages of AI, the biggest challenge was simply making AI more powerful. But as the technology continues to improve, more businesses are starting to use AI in real-world workflows. AI is helping employees organize customer information, search internal databases, manage business processes, and even handle tasks that previously required human workers. In other words, AI is moving beyond showing what it can do and starting to create real business value. And while that may sound like a small shift, the impact behind it could be much bigger than most people realize. And I think that's the most important part of this story. When AI is only answering questions, companies mainly care about how smart it is and how accurate the answers are. But once AI starts participating in real work, the questions begin to change. Because for businesses, having a powerful AI is important, but having an AI that can be properly managed may be even more important. Let's look at a simple example. Imagine a company deploying dozens or even hundreds of AI agents. These AI systems aren't just answering employee questions. They're searching documents, accessing customer information, updating records, and completing parts of everyday workflows. That sounds incredibly efficient, but it also creates a new challenge. Cursor's growth, its integration with xAI, enterprise adoption, customer spending, and profit margins will all become key metrics to watch. The impact on other companies could be just as important. Microsoft, GitLab, Atlassian, ServiceNow, and other enterprise software and developer platform companies may now be viewed through a different lens. The real question is no longer whether they have AI features. The question is whether AI can improve customer retention, increase spending per customer, and drive sustainable profitability. Meanwhile, chip makers and infrastructure companies remain critical. As AI applications become more widespread, inference demand will continue to grow, which means compute demand should grow as well. But the semiconductor story is likely entering a more selective phase. Investors will increasingly distinguish between companies benefiting from training workloads, inference workloads, networking, ASICs, and energy efficiency solutions. Data centers, power infrastructure, cooling systems, energy storage, and optical networking aren't going away either. If AI reaches more users, the infrastructure requirements behind the scenes only become larger. But investors can no longer assume that every AI-related infrastructure company automatically wins. Orders, margins, delivery timelines, and valuation still matter. For US investors, the opportunities may increasingly come from both the AI supply chain and real-world adoption. That includes areas like servers, optical networking, power infrastructure, data centers, enterprise software, AI productivity tools, and industry-specific AI applications. But the companies with the most long-term potential won't be every stock with an AI label attached to it. The real winners are more likely to be businesses with clear exposure to AI demand, orders that can actually translate into revenue, and valuations that haven't already gotten too far ahead of reality. And from that perspective, NVIDIA's bond offering starts to make more sense. If the industry needs more data centers, servers, and computing power in the years ahead, then raising capital now isn't hard to understand. So I don't think the real story is how much NVIDIA is borrowing. I think it's what this move says about where the industry may be headed. And more importantly, NVIDIA may not be the only company seeing that trend. Because if NVIDIA were the only company making moves like this, we could probably dismiss it as a company-specific decision. But that's not what we're seeing. Over the last few years, major tech companies have been increasing their investments. Amazon continues to expand its data center footprint. Microsoft keeps increasing AI-related spending. Google is building more computing infrastructure. These companies operate very different businesses, but their capital spending seems to be moving in the same direction. They're all investing heavily in AI, and that's an important signal. Historically, when an entire industry starts investing at the same time, it usually reflects a shared belief about future demand. We saw it during the internet build-out. We saw it again during the cloud computing era. And today, we're seeing something very similar around AI, which suggests this may be bigger than any one company's strategy. It may be the beginning of a new investment cycle. If only one company were making these investments, it could just be management's opinion. But when multiple industry leaders are all moving in the same direction, it's worth paying attention, because that's often how larger trends begin to emerge. And what's even more interesting is that it's not just technology companies making this bet. The capital markets seem to be making the same bet as well. Many investors are focused on how much money NVIDIA plans to raise. But I think a more important question is why investors are willing to lend that money in the first place. Large institutional investors don't usually focus only on short-term excitement. They're thinking about long-term returns. So when the market is willing to provide tens of billions of dollars for AI infrastructure, that tells us something. It suggests that a meaningful amount of capital is betting that AI demand will continue growing for years to come. Otherwise, those investments would be much harder to justify. In a way, this is also a vote of confidence from the capital markets on the long-term future of AI. Put it all together, and a bigger picture starts to emerge. Many people see NVIDIA borrowing money. I see a sign that AI's most expensive phase may still lie ahead. When a cash-rich company starts raising billions, it may signal something bigger than its own plans. That's why I think the market may be underestimating AI's future capital needs. What do you think? Let me know below. I'm Nolan. See you next time.